Hello, friends. Chris Kelly here. Another week, another another foray into stats. And happy fall, by the way. We are uh, charging headfirst into the fall season. The weather isn't quite cooling off, but it definitely feels like fall, even when it's warm. So, anyway, just wanted to touch base this week on a couple things. There's a This is a topic actually I might dive into for a few weeks, at least touch base in a few different ways. But first, I'll start with stats and just look at what's going on. Um, I actually pulled up stats from last week as well, so we can, excuse me, from last month as well, exactly a month ago. So we can kind of look at what's happened over just a slightly longer horizon. I usually look at things here weekly, but we've kind of lived in these types of numbers now for a couple of months. Even looking last month, the numbers looked really similar to this. So we're slower in pace than we were in velocity than we were even in 2019. Again, 2019 was a super robust market. I mean, it wasn't the nut job of a market that we had these 2 years, really a year and a half. But it was still up until those 2 years, this was like a record type market. So we're slower than that. Not the end of the world, but we're definitely slower than that. And coming off of these numbers, where I was saying week in and week out, we really need these inventory numbers to get up over 1,000, and we do. But there's a reason. There's some potential reasons that's not happening, and I'll touch on that in just a minute. What we are seeing, and this is why I wanted to pull up a month ago. We are seeing, as I said last week, the average / median sales prices finally come down a little bit, and that's the point of raising interest rates. I mean, that is kind of the whole point of what's going on to mitigate inflation, is to create a cooling off, and that plays out in the real estate market as well as every other part of the economic markets. So it's finally happening. A month ago, this number was at 572, and this number was at what was it, 630. So not huge declines by any stretch, but they are starting to decline, and ultimately that's what happens. These numbers have started to increase. That's also what happens, not dramatically. That number, the median days on the market a month ago was 15. This number, the average days on the market a month ago, was 29. So they haven't moved dramatically. The movement on the median number is more significant, of course, but again, not anything dramatic. So the thing I kind of want to touch on, and the thing I'm going to spend a little time on going forward, is what exactly is a professional's market? Now, that really applies more to me than it probably does to you. But as a real estate broker, being a professional, what's the old I don't remember if it was Julius Irving, but somebody had made a quote, being a professional is doing the things that you need to do even on the days you don't want to do it. Sometimes this market's incredibly easy, and the whole industry has been able to pat themselves on the back and just be stars for existing and selling record levels of real estate. That's not how this market and the market in general works long term. There are definitely cycles, and we are in the middle of starting to see one. So that's okay. Again, a professional's market to me is, no matter where we are in a market cycle, giving you good, concise information based on your circumstances, so that you can make the best possible decision for you and your family. End of story. That is it, in my opinion. So there's certainly more to it than that. Part of giving you good information might be, well, why on earth have prices not come down more than they have, for example, when interest rates have moved as much as they have in as short of amount of time as they have? And I think I've touched on this before, but there's an interesting article. I'm looking over at it here on another screen, but there's an interesting article about people. And I've had this conversation. Gosh, Chris, Why would we want to move from our 2.75 interest rate? Because now we're going to buy something at 7 or 6.5 or whatever it is at the time. Um, in and of itself, in a bubble, that's a great question to be asking. Um, and again, as I've said, the lead variable as far as the reasons people move are usually not the interest rate. People usually move because they want to move. If they're moving locally, they want to move to a better house. They want to move to a house that better fits their circumstances. Again, people get divorced, people get married, people pass away, people get relocated for jobs. I mean, there's all these things, right, that cause people to have the conversation about moving and then ultimately pulling the trigger on making a move. So, you know, understanding in the interest rate piece by itself, yeah, if that was the only reason you would consider moving is because, well, we'd like to move, but gosh darn it, I don't want to pay 4% more in interest. Well, then the first part of that statement, well, we'd like to move, really must not be that compelling. And if it was, well, then we'd figure out how to mitigate that or bridge that gap. As I said last week, maybe there's an adjustable product, maybe there's a buy down type circumstance that could help bridge some of that. But your why has to be significant enough to make a move when the market is shifting. I have a client that I recently sold a home to, and they're considering selling it because they just don't think it's the right fit. Well, what's the downside in that? It's likely they're not going to do as well as they're not going to sell it for as much as they paid for it. However, the house that they're going to buy assuredly is going to be less money. Maybe not dramatically, but there's going to be more choices right now than there was, and it's going to be, chances are, less money than had they bought it 6 months ago. So, you know, there's definitely two sides to the ledger, so to speak. That said, should we have a lot more inventory now than we do? Yes, we totally should. And a lot of the reason is that the title of this article I'm keep looking at is, are we seeing a mortgage rate lockdown? Well, that whole conversation in mass about, well, I'm not going to move because my rate's so good. Yeah, that could have an impact on people's decisions to buy, which has an impact on people's decisions to sell. Interestingly, a year ago, if you asked me, and I've said it here, a year ago, it was, well, Chris, we're not going to move because we can't find anything to buy, because there isn't any inventory to speak of. So, I mean, I guess there's always a version of this yin and yang, this challenge, you know, for various reasons. But again, at the end of it, you know, if your why is significant, then we're going to figure out a how. And a good lender and a good real estate agent, you know, our existence in a transaction is exactly that, to help you figure out your why, get solid about that, and then help you figure out the how. So to me, that's what a professional's market is. That is the crux of it. That's the heart of it. So, you know, I'm going to try in the next couple of weeks to see if I can maybe get a blurb or two from some other very excellent real estate professionals that I know in this industry, both locally and abroad. So maybe to see what their take is. Anyway, as I always say, we are here for you. We are here for yours. If there's anything going on that we can help with, even preliminarily, a lot of times we start dialoguing with somebody that isn't going to move for a year or two. That's fine. We're here to have that dialogue with you. We're here to help you start making decisions. So anyway, until the next time.